So where do you bank? Is your mortgage held at the same place you do the majority of your banking? Most people don't. It's all in different places, right? Do you realize that different banks and different mortgage lenders all have different rates? I'm not here to talk about rates today, and we also know that it's not just about rate, it's the terms and conditions that go along with that mortgage as well. But I did want to talk about the Bank of Canada's 1% interest rate, because that's caused a big, huge stir this last little week, as people have called me multiple times asking different questions. And really, what I wanted to share with you today is whatever the Bank of Canada does, whatever is happening on the big global scale, really doesn't affect each one of us individually the same. We have to think about our personal economies and where we're at as individuals, what we need to do and where we want to go. What I'm trying to say is my economy, your economy, Frank's economy, Susan's economy, they're all completely different. If you're in a situation today where maybe it makes sense for you to get out of renting and buy your first home, even though interest rates are a little bit higher than you expected, you start paying yourself instead of somebody else through rent. Maybe you're in a situation where you can take advantage and you can buy a rental property right now. This is also something that people are thinking about. Even though interest rates are high today, are they going to stay that way? Probably not. They've just been really low for the last few years. Right now, I have one client who's locked in at 1.63%. That's free money. Does it matter to him that the Bank of Canada went up 1% and everybody else that's getting a new mortgage is going to have to deal with it? No, because he's locked in there. I have another client, sadly, who's in a variable rate, and his interest rate has been going up a little bit, and his payments have as well. If this 1% actually hits him over the next 5-year term and it stays consistent, it would cost him $35,000 on his $700,000 mortgage. That's a lot of money, right? Because it's $7,000 a year over 5 years. But that's just his particular situation. And I bet you it doesn't stay that way. I'm sure it'll change. There'll be another interest rate that he can get into, another program, or something's going to change in those next 5 years. But it did affect him differently than the first guy. Another client of ours is actually in a different situation where he bought his first investment property. He's seen it rise over $200,000 in the last year and a bit. And he wants to know, should I sell it? Well, no, even though your interest rate's gone up a little bit and now you're paying a little bit in because your cash flow isn't there anymore, that's okay. He's just taking his money from one bank account and truly putting it into a better savings account with his real estate investment. So depending again where you are, or if you want to know specifically your situation, I'd love to chat with you because we want to break down again your situation and what is making sense for you, right? People are still buying houses. People are still moving into that bigger home or the bigger yard or whatever it is that they're looking for because their situation is determining that they have the ability to make a move today. So let's chat about you and your situation. Give me a call. Bye for now. Well, you must have liked what you were watching. You made it all the way to the end. Thank you for your time. If you want to follow along with us some more, always subscribe to our channel as we're always putting out content like this for you to enjoy. Thanks for learning. Bye for now.